Okay, hello everyone. I'm just gonna do a quick BTC update because I'm probably gonna have to be out of the studio, not having access to a PC for the next 2 days probably. So I'm probably not gonna be able to update anyone on basically anything. But I just wanna give you a quick update of what happened on Saturday. And well, honestly, I really wasn't expecting this to happen so soon. Was expecting more of a sideways range for these 2 days, not the pump that we had yesterday. In any case, this was one of the models that I gave you guys regarding the Wyckoff distribution model. So if it continues to play out, we probably just going to be dumping really hard and get that liquidity that, for example, Geo has been talking about for a long time. I mean, maybe the past week or so, or 2 weeks. So basically, the trade that I'm talking about is this one, is the upthrust test. It's basically an SFP of the BC point. This is the buying climax of an uptrend, right? So this is essentially the manipulation to trick people into thinking that we are still coming up for more upside. And there are essentially two distribution models, two main ones, and this type of SFP happens a lot of times. It's basically just a liquidity grab, right? And you can have either this as the main ones. I mean, you can have either this model or a distribution schematic one, where essentially we go for another upwards move to then either do an SFP of the upthrust region, or we take out any other highs. In theory, for example, we could, let me hide this. We could now, so we took out this low, this high, I mean, and a UTAT test, which is this, the acronym for it is upthrust after distribution, would be to target this high. There are a number of things that you can try to think about and target regarding levels above this. For example, I usually, you guys have seen me use this a lot. So essentially, TR pockets, for example, one of the ways to use them, TR pockets are basically Fibonacci deviations, right? One of the ways to use them is after the end of a big move, which, for example, for what now we have seen this, right? But at the moment, this was the big uptrend. Lasted 3 days, if I'm not mistaken. Yeah. So this is the end of the move. This is the retrace, right? So you draw the TR pocket from the upwards, the end of the upwards movement to its retrace, and you get these Fibonacci deviations. These essentially are just values with minus and the multiplier on them. It's 618 and variations. It's just another sequence, right? And it's very curious that the 272 is right on that SFP, so, or that high, I mean. So this can be an SFP type of trade, but there are other things to consider. For example, if we go to ADAS, and for anyone that uses ADAS and has the typical question about how can I see more days in the 30-minute time frame. For example, you can go here on the M30 chart. In my case, it says M30 chart, where it says days count. Unclick auto, untoggle auto, and choose whatever days you want, and click apply. In this case, for example, it allows me to show that we have two single prints. These blue, strong blue lines here are single prints, meaning that we have one at 30,810 and 31 and $30. So these are two single prints right here. For example, these are very possible trades to happen, and in the sense that this is let me see if I have, where do I have those? Yeah, so let me hide all this. So this would be your SFP trade, and this, for example, you would target the single print or try to enter on the single print. And then you have another confluence here, which is that if you go to the 4-hour, this is your last order block with an FVG that we have tapped into it, but this is what remains as a resistance for that area. And speaking of order blocks, for example, I like when an order block actually takes out the high. For a bearish order block takes out the high of the previous candle. So for example, if this candle didn't exist, this would be probably a weak order block, because its high, its liquidity is still vulnerable, meaning that with this candle, when it happened, it took out that liquidity, and this was a 4-hour order block, so there are a lot of trades happening here, right? In theory, this is a much stronger order block than, for example, this right here, because essentially this took out the liquidity of all of this. So it already did its job, but no one took out the liquidity of its candle itself. So, and well, this is a good example of why price actually took it out. So in theory, this is a good resistance. Its coordinates are, it starts at 31.38, and 31.38 is right when one of the single prints end. So this is probably a good trade to have. Of course, you can take the stop loss, can take it to the high of the order block, and this can still be an amazing trade, right? This has the potential for a distribution model. This has the potential to go way low, right? We still have a daily order block here that, you know, wasn't tapped, wasn't touched anywhere. There was no kind of test about it, so inevitably and probably we're gonna range inside of it, if not react for a more upside. I don't really have a bullish case, like a macro bullish case, for a lot of reasons. One of them is that, for example, from this high to this high, we had a very bearish divergence in CVD and OI, so I don't really see a very strong case for more bullish movement. But for example, us going to 31.31032 is not exactly a macro bullish scenario, you know. We can just tap it and strongly move out of it. So all in all, for at the moment, these are the possible trades that I'm seeing. SFP of this high, I'm not exactly looking at any of this. And speaking of about or relating to that 4-hour order block that I showed you earlier, we don't really have any of those here. So all of this, this would be liquidity, and this is actually, it looks like a curve, right? doesn't really look like something that can create a strong resistance. You can maybe argue that, for example, I don't know if it did. Let's see. It didn't. Okay, for example, I was just checking if this high is higher than this candle, and it's not. For example, this candle is at 30,135, and this is just 10 cents lower. So it didn't take out its liquidity. So I wouldn't even consider this candle to be a good order block for the reaction, right? For example, so this is all liquidity from my perspective. We could maybe say that, for example, let me see. This block here, I'm on a 15-minute chart. This block here had its liquidity taken, might give us a bounce, but you know, there's practically no range inside of it, right? It's a lot better if you have liquidity before a block, because that shows that there were a lot of trades happening in that range. And for example, this would be super weak. For example, this is a good block. I had it marked for a trade, and well, I was working, so I couldn't do anything about it. I did mark it out when it happened. It's good. For example, a block inside of range gets its liquidity taken like it did here, and basically breaks out of the range like it happened with this candle, right? So in essence, this is your BOS internally, right? And this box, for example, this is your range, and the last block that happened, the last block that got its liquidity taken, and price broke out of it, was this candle right here. Because for example, this candle didn't go below it, neither this one, but this one did. So this is the last block in my perspective. And for example, I would take a trade like this. I see a lot of people just using the block. The wick is a lot of times a good safety net. So for example, even if you just did, even if you just targeted this high, this would be a 2.61 risk to reward. So, you know, 1 to 2 is my bare minimum, so it's good enough already. But of course, if you target this would be an 8.06 risk to reward. And for example, I don't see any of that here, none. So I don't really have any reason to short anything in this area, right? The only thing that I would, oh, that's odd. Guys, check this out. So on the 30-minute, my high, I'm on MXC. I don't know if this is a trading view bug. On the 30-minute, the high is at $30,525. If I change to the 15-minute, the high is at, oh wait, the high is at 30,606. That's weird. Let me check another exchange. $15-minute, 30-minute, it's the same. So it's just MXC. Okay, that's weird. I wonder if that's a volume gap. Let me see if I can find something on the 1 minute, but I doubt it. Yeah, this is just a candle. That's weird, man. A volume gap is when for example, let me see if I can find one. Nothing here. Nope. Okay, for example, this is a volume gap. This right here. This is essentially what? Let's see. This is a $2.3 volume gap. It's not an imbalance. Okay, this is essentially when volume at the exchange itself happens so quickly. A change in volume happens so quickly that the open and the close of a candle don't even match. You can see this more often on low volume coins, or for example, some stocks sometimes do that as well. So anyway, getting back to it. So because I'm not seeing anything here that I might short, I'm not gonna do that. I also don't really see, for example, these can be maybe considered equal lows, practically the same. This was just a very tiny SFP of that, so this region is a target. Let me see if we have liquidation levels there. Okay, so we have one below it. But again, to long this and target the highs, for example, it would be kind of risky. I would probably, I have been looking at 29,110 because, God, this looks confusing when I use that. 29,110 looks a bit more probable because it's also a level that has a lot of, for example, if I draw a line here, okay, you can see that this level has a lot of wicks, a lot of touches to it, even in the past, right? So this is more of a support resistance flip zone. Might be interesting, but also the reason for it is that, for example, if you draw a Fibonacci, standard Fibonacci, it is just below the 0.5 fib. Might be just good enough to take us to the SFP of this, or the single prints, we don't know. But in any case, we also have just below the 618, we have our daily demand. We have another 4 hour order block that meets my criteria in the sense that it had its liquidity taken. And well, this is a fair value gap as well, so it's a target as well. So longing from around this zone, or better, let's say looking for longs around this area might be a very good place to long and bet your money on, right? And so in essence, let's see if I do have any setups there. I know that I have my fibs pointing there, so I probably shared some setups there. Let's see. Yeah, I only have this one, so actually let me delete the ones that are outdated. So this is a possibility. It's, in essence, it's taken out. The idea is to take out these 2 points, these two liquidity points. It is on one of the Fibonacci deviations that I use. In this case, the end of the move to its retrace. And so another trade would be to get into this 4-hour block. The stop loss, you can use the block itself, but sometimes they do get filled. Demand, it's kind of a situation where you have to let price touch it, react to it, and maybe go into the 1 minute, see if you can find any blocks that can be a good limit, zone to limit, or for example, break out of when you see a change of character and you see a BOS, you get into that, following the 1 minute trend, stuff like that. But probably good idea to just wait it out, see if it comes here, and if it doesn't react, you just don't do anything, because you can also consider that, yes, okay, this is a daily order block, and probably there are a lot of money here involved in this area. But for example, this right here, this is essentially a curve. It's a liquidity curve. You don't have any type of those blocks on the 15-minute, for example. And you do have, for example, a fair value gap here. So this would line up with the 618 deviation. But, you know, kind of risky to just let a limit so far away from where price is right now and just let it and just forget about it. We also have a single print here. So again, this is another magnet. This has the very, for example, talking about how it's a bad idea to leave limits and forget about them. For example, if this is a single print and single prints tend to attract price, this would be a bad trade, right? So, you know, take your trades when they happen. I mean, like when the levels get touched, don't just limit and forget them. Probably a bad idea. Let price reach the levels that you want to reach, and then try to find your setup inside like the 1 minute or 5 minutes, something like that. But very low time frames. Then you can even use market cipher or RSI or whatever you like. Just probably it's a bad idea to just trade blindly. In any case, for example, this is a possible trade. Stop loss maybe here, for example, below the block, below the liquidity. So this is one, and if this happens, this would be TP1, right? I really don't know if the target should be here or here anyway, because on MXC though that value is different, but whatever. So another area that I had marked out was this one. On the 4 hour it's another block, but honestly I think it was tapped already. And this is also another good example. For example, my word. Let me see if I can show you. I think it's on the 4 hour that I have a good reference there. Yeah, for example, following what I just told you guys about, this is a block that has a fair value gap. If you consider from here to here, it hasn't been touched yet. But it didn't have its liquidity taken, so probably it's just a good target and nothing more. If, for example, price goes swiftly below it, it might be a good breaker block, and the meaning that if price comes below it, the block itself can be a good place to short for a continuation trend, and you would probably go down then. For example, this area is a much better area to expect a bounce, because that block did have its liquidity taken. But in any case, if price just goes right through it on one single candle, yeah, it's probably a good breaker block. Actually, let me just update its text description. So at the moment, basically, this is probably my best possible long. Let me see if we have any nice naked view ups there. Ooh, okay, only here. 27,013 naked view up there. Oh, and look at that. Naked view up also there. Let me mark that. This goes way back, so it is at 30,817. That's a very good confluence for the TR pocket divergence there, deviation there. And the single print, that's really nice. Actually, let me just put it on top. Okay, that's interesting. That's really good. The previous day VWAP also can be a good resistance to take us down there. I'm not really seeing any not really seeing a reason to go above VWAP right now, unless it's just to take out liquidity, but that would mean that we would have to have a place to bounce from right here. And the only thing that I'm seeing right now is, again, these equal lows. Nothing else really. So in essence, oh, and by the way, we just created, if we break out, so if we break out of this range now to the downside, and imagine that we actually do, I don't know, this would be a very stupid trade. Well, let's imagine something like this. If someone were to long on the equal lows liquidity grab, I wouldn't target more than this order block right here. And the reason for it is that this white candle, it got its high taken by this candle, the next bearish candle. So if we break out of this to the downside, I'm expecting this area to be a good resistance. Again, because it got its liquidity grab. It's basically just that. For example, you had this happen 2 times already. Here, last candle, also a previous candle before that. Last candle, liquidity taken, breakout, tap into it, go down again. And you can also say that for this one. Did it tap that? Let's see. It didn't. Super close. But yeah, this is another one. Also, well, you can maybe count with that low of that candle, considering this as a range, and that would count anyway, right? But what I mean is that this would be kind of a stupid trade. Your stop loss would have to be minimum here, and that's a 1.3 risk reward, so no longs here. Maybe if we break out and you're not in any kind of trade, maybe expect a break of structure and then a retrace to this area to short, and then you can target this, and that would be a much better trade. in my opinion. So if we break out, you would have to consider breaking out below this, okay? Breaking out below this line. Retrace and target that low there. That's a 5.5 risk to reward. That's much more decent, right? So let me just see how our limit order is happening. So yeah, basically I'm not seeing anything worth my time besides those bigger trades right now. And I'm not in any trade anyway, so I would gladly jump into one, right? But for example, this is not a naked VWAP, as you can see. The VWAP was here. The day ended here. We bounced from it, or from this block, whatever. But we bounced from it, got above the VWAP. Actually, you could say that you had a lot of possible good longs to target this high here, just using the VWAP. One here, another one here, and just follow the structure, right? So no really good blocks below this. So breaking these equal lows, I'm not really seeing any reason to not go to this level. 29,110. Starting at this area and entering the TR pocket deviation and the daily block, that's where I would like to long. If we are to go above, for you know, for a bullish scenario, but then again, we don't really have a lot of bullish reasons, I mean, unless this is the moment, or this is the month where we go to 32k, but I mean, who knows, right? In essence, you can say that from this candle to now, let me just extend this. If we enter this area, this range, right, we will probably go a lot lower. Let me see if we have any naked point of control. Only here. I can expect a lot of people long in this section, and well, I wouldn't. So yeah, probably the only good place to long, and I'm not sure if would be a good or a very long trade, I mean, in terms of duration, would be here, because we have a ton of stuff there. Single print, this is a long lasting range. Naked view up, some blocks there, take into account, and the naked point of control. Also, I think that I saw on Addis that we do have, yeah, at 31k we have a TPO and a naked point of control. Let me see more in the recent price action. Yeah, okay, so this line right here, this red line, this represents an unfinished auction. Basically, that's my only reason for a bullish scenario. And that's basically it. I don't really have any other reasons there. We do have a naked view up here, 28,519. Let me see if I have that marked. Okay, I do. Well, that's it, bro, guys. That's it. Can't say that I have any more probable trades. Let's put it that way. Either we go up from one of the levels mentioned here, just to form a distribution model in this area. Take into account that the distribution model has to happen in this area for the trades that I'm talking about, because if you take a much more macro levels and price action into consideration, for example, let me change to the 4-hour. So you can just say that, so not starting from here, and so this would be the first high, this would be the low. So in essence, when we couldn't break and close and stay above 31k here, and when we SFP'd this, in theory, the high of the range is probable again. So 31,800 is, in theory, from a range perspective, the high to be taken, because we couldn't break and stay below this, right? This is the main concept. Okay, so, but for example, I'm not sure if it's USDT. Yeah, so, but in essence, here, we couldn't go above this, but we also were unable on Coinbase and some other exchanges. We couldn't go below this, for example. So in theory, this is still the weak low. And everywhere, or almost everywhere, we took out this high, but not on Coinbase. So this is my only reason to think that we might have another move up, but it has to happen soon. Not, we can't go like 28k and still go there, because then the distribution really doesn't make a lot of sense, because we would be breaking levels that are important for a distribution model to happen. We would then change into a much more bearish structure, and probably on the way down we would create a lot of strong resistance levels that would be harder to go above from them. So in theory, this level 24,800 is still the weak low, meaning that this is the strong high, but this is a liquidity that has yet to be taken on exchanges like Coinbase. So this is the only reason for an upwards move, in my point of view. Also, in terms of volume, I don't really look at volume that much, to be honest. But there's a, let me just change the colors here so you can see this better. Although we did take out this high twice now, the volume was so much lower now. So this indicates exhaustion, a lot less buying power, and essentially it's a bearish volume divergence as well, anyway, right? So getting back to it, in theory, so this is our psychological level, this is our BC. I didn't see it this way at the time, Let me just delete this box. I didn't see it like this, but we can consider it the Wyckoff distribution model like this. So let me just sort this out. And I'm gonna leave the Utah trade there. So yeah, we want the first one, and this would be the model. So this can be our sign of weakness, and this can be our ST. So this is our UT, which it's actually kind of funny that the UT lined up with my path, but that's just pure luck. So this is our UT level, and if we do go up now, we will have, if we go up above this will be our Utah. And my best bet for that is this. One of these levels. Actually, it has to be the 1618, because the 1272 doesn't SFP this. So it has to be this. 30k, 800, around that. We have the single print there, naked view up, the 4-hour order block, and that short, that would be really profitable long short to take, and it would be something to, well, probably to target the 24 or more, 24k level or more. Because then what do you have? You're not going to use this. It's just one block. Does it have another levels behind it? Yes, it does. Will it hold? Probably not. Maybe this area? Because again, just like this, it also is a place that has a lot of levels that got into it, right? Maybe. But will it hold? I mean, it's just one area, right? Below that, this is a liquidity curve as well. So it kind of gets scary if we start going down there, you know? Especially for spot holders. It really does get scary because this is just a curve, man. It's this, none of this will hold. There will be range, but it probably won't hold. Just looking at it technically, not even, it's not really an opinion, right? I'm just looking at curves. No one ever trades a curve like this, you know? You expect it to be taken. That's it, nothing more. So let's see. In essence, TLDR, I guess. Yeah, so this is breaking out now. Where do I have that? This is a good place to short, probably, and target this low. Do I still have it there? That's the BOS. Those are the equal lows. I'm gonna put this on Geo's Discord later. Oh, this was wrong. Sorry about that. Anyway, where do I have that? Fibs and TRs. Okay. This is it. So probably something like this right now to target that. But for me personally, this would be TP1. Final TP would be once we reach the daily demands. And bear in mind that this is if we are in a distribution model 2, I think. Yeah. Actually, let me include that. Either like this, or like that. That would be juicy, right? 21 risk to rewards. Might just get in on that and see where that takes me. Okay, guys, I'm gonna end it here. If you guys have any questions later, just tag me and I'll try to answer them. Well, probably tomorrow. But I hope this was clear. Let me know if you have any feedback as well. Anything can be helpful because I'm basically just starting out this streaming stuff in general. So see you guys soon. And hope you guys like it. Leave me a comment. Tell me your feedback. Goodbye.